Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. What a Thursday morning it is turning out to be, given the fact that we have a barrage of positive news coming in globally. You had the US Fed interest rate decision on hold, but the Fed has indicated that rate cuts are coming next year. And of course, you have the US 10-year Treasury yields. They have fallen below that 4% mark. So that's a big positive coming in. GIFT Nifty hinting at a start above that 21,200 mark. Strong gap up, and if you look at Wall Street, you saw Dow clocking 37,000 mark for the first time, so a record high coming in there. So lots of good news to digest this morning. We'll of course be touching base with our experts and figuring out where our markets are also headed today. And of course, we'll also be taking up all your stock related queries, so send them in to us on our YouTube feed and we will try and take as many as possible. But before we move any further, let's take a look at the top headlines at this hour. The US Fed keeps interest rates unchanged on expected lines. Chairman Jerome Powell forecasts 3 rate cuts in 2024, saying that further rate hikes are not the base case anymore. Fed's dovish outlook spreads cheer on Wall Street. It's a fresh record for Dow as it ends above that 37,000 mark for the first time ever. The S&P and the Nasdaq too close at 52-week highs, and the 10-year Treasury yield, as I mentioned, has dropped below that 4% mark. Asian markets, mirror sentiment. We see both Nikkei, Kospi and all the other indices edging higher as the Fed has held interest rates and signaled cuts in the next year. The GIFT Nifty is indicating a gap-up start for the Indian market. Crude rises as demand concerns ease after the Fed signals rate cuts for next year. Brent trades around that $76 a barrel mark, also aided by a larger than expected drawdown in US inventory. And stocks in focus today. Watch out for Fusion Micro as Warburg Pincus is selling a 9% stake via block deal. Meanwhile, the primary market action remains heated as DOMS Industries issue is oversubscribed 2.5 times, with the retail portion subscription at 16 times. India Shelter's IPO, meanwhile, is subscribed less than 1 time as of last evening. And Inox India IPO will be opening up for subscription today. Let me first, listen to what Fed chairperson had to say after the announcement of the rate decision. In fact, he sounded pretty dovish. So let's listen into what he had to say post the interest rate decision announcement.
Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. Inflation has eased over the past year but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time.
Well, let me bring on board, Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining in. Peter, hi there from India. Hope you're doing well. First question to you. After listening into the Fed chairperson, do you think this is as dovish as he could have been?
Absolutely. The prior meetings, they talked about raising interest rates. Now they're forecasting in lowering interest rates. Obviously, the campaigning hike is finished. And now, of course, they continue to work on getting inflation lower. And of course, he was very consistent with what he was saying today about the jobs market and inflation going in the right direction, but still needs to be combative, because he said that it's too early to declare victory. But the victory in terms of what the market wanted to hear was basically given. And let's say that Santa Claus came in the form of Powell and gave a nice gift to Wall Street.
That's correct. Santa rally, of course, playing out on Wall Street. We've seen Dow clock in a record high, S&P 500 and Nasdaq at 52-week highs as well. But 3 rate cuts is what the Fed is hinting at, right? But markets were penciling much more than that. The Fed watch tool was indicating somewhere around 5 of 25 basis points each. What is your own sense? Do you think we'll see more than 3 rate cuts? And when do you expect the first one to come in?
Well, it all depends. I still think we're headed for a very mild recession. And if it's a mild recession, then I think probably the Fed is right that we'll see 3 rate cuts next year. The question is, when do they begin cutting rates? The market seems to think after at the end of the first quarter. I'm somewhat skeptical about that. I think it will probably be in the latter quarter of the third quarter, or at least at the beginning of the third quarter. And of course, if a severe recession sets in, then yeah, I think we can expect more than 3 rate cuts, possibly 5 or 6. But again, that's only based on a severe recession. And I want to point out something else that Mr. Powell said today. He said, look, there's no recession in 2023. We know that. But is the risk of recession in 2024 still possible? And he said, yes. So, the possibility of recession is still out there. And it all depends what type of a recession we're headed for, if we get one.
Right. In terms of inflation expectations, 2.4% is where Fed sees inflation heading in the coming year, and 2% target in 2026. Do you think that target could be met sometime sooner than 2026? Do you think Fed is being a little conservative with its inflation targets and expectations?
Yeah, it all depends on 2 factors here. One, oil prices, which we know are basically in a bearish trend at this time. And if they remain around these levels, then that's a possibility that will bring down the 2%, that will help us bring us down to that 2% target sooner than expected. And of course, the other factor is basically what happens with wage inflation. And if that continues to moderate, then the possibility also exists. But I kind of think that getting down to 2% is going to take a little bit more time than perhaps what the market might be anticipating.
Right. Coming to emerging markets, do you think, this sets the stage for EMs, emerging market central banks, also to start looking at cutting rates, for instance, RBI? And secondly, what is your thought on the Indian markets? The political uncertainty is out of the way. Here as well, we've been hitting fresh record highs. So, in the EM basket, how are you viewing India at the current juncture?
Well, as far as emerging markets are concerned, I would say even the G7 economies, as the Fed goes, so the others follow. And of course, it all depends, obviously, inflation in their own territories. But if you look in Europe, inflation has been falling, and in fact, it's been falling even at a greater pace than here in the States. If you look in Asia, Japan is still fighting deflation, not inflation. In China, is certainly headed towards deflation and no inflation. And so, yeah, I think that we will see emerging markets following the Federal Reserve. In fact, we're probably going to see that very quickly in Europe, and then I think it spreads to other nations. Of course, there are nations that will not follow because of extremely high inflation, such in South America. But generally speaking, I think emerging markets and in Asia will follow.
Right. And your thoughts on India? the kind of rally that we've seen here, we've seen the political uncertainty get out of the way. Foreign investors have made a comeback into the Indian markets. Do you think that will only accelerate going forward now that US yields have also fallen below that 4% mark?
Well, geopolitical problems, are not going to go away anytime soon. They never go. They're always around some way or another. At times they're just dormant for a while, but then they flare up. So my guess is that they're going to stick around. Could they cause a reversal in the inflation trend? Of course. But again, it all depends what happens with the price of oil. And I don't see oil moving to levels that would threaten inflation anytime soon.
Peter Cardillo there. Thanks a lot for taking out time and joining in this morning. It's late night there, so wish you a good night. And once again, it was a pleasure chatting with you this morning.
Thank you.
Thanks a lot. With that, let me also bring on board Shivangi Sarda of Motilal Oswal Financial Services joining in this morning. Shivangi, as usual, always great to have you on the show. We saw a very smart recovery kicking in the second half of trade yesterday, last hour, so to say. And this morning, the GIFT Nifty is on fire. It's hinting at a 200-point gap up. Do you think we are in for a fresh breakout on the charts when it comes to the benchmarks?
A very good morning, Nandita. Thank you for having me. First of all, congratulations to each one of us for the equity market touching new lifetime highs every day. And we've seen spectacular move by the bulls, and especially in the yesterday session, the second half was commendable. The entire losses of the day were recouped. And this clearly indicates that today's opening will be, quite a lot of, filled with fire. So we are expecting, new highs over here. And then, we are looking at 21,250 immediately, and then 21,500 next on the cards for the index. And 20,750 would be a crucial support to watch out for. And any decline could be utilized for buying opportunity in Nifty index. Now, talking about banking index, we've seen that this index has underperformed for quite some time. And after this entire slack, it is now at par the index, and it is performing. It recently did touch a lifetime high above 47,500 zones as well. So we are looking at those levels and then higher to 47,750 for the banking index to touch as we head towards the year end. And for the support, we are looking at 46,750 as a crucial support to watch out for. Now, the entire PSU and private space banking are looking quite positive. In fact, the PSUs are supporting the index right now more than anything else. So one should watch out for this space as well. Sector-specific action is going to drive the market. Even the FII's long-short ratio has improved. Over the last 1 month, it was around about 10%, and now we are at 60%. So it indicates that there is buying across the street, across the sectors, and even by our foreign investors.
Right. Since we're talking about banking per se, let's take up a few queries. Couple of queries coming in on a Bank of Baroda from Siddharth Jain as well as Funny PG. They want to know if it warrants a fresh buy at the current juncture. And we also have a query on HDFC Bank from Shubham Gupta. HDFC Bank, just about starting to participate in the rally. Do you think it has more legs? Do you see more, higher highs? In fact, higher levels on the charts for HDFC Bank? And Bank of Baroda has already run up quite a bit. Do you think a fresh entry in Bank of Baroda can be looked at the current juncture, or do you think wait for a dip?
So Bank of Baroda has given a fresh breakout right now on the weekly frame, and we've seen that it used to have a certain hurdle at 218 odd levels, and it has surpassed and moving quite well. Even on the monthly basis, we've seen that this stock has respected its upward sloping trend line. So overall, the stock is quite positive. As we mentioned, the outlook on the banking entire sector is looking quite positive. So this stock could, run up to 230 and then 232 odd levels, and 217 could be a crucial support to watch out for in this stock. Now, talking about the HDFC Bank, we've seen that this stock, has sort of formed a rounding bottom on the weekly frame. And if you look at the broader time frame monthly chart, it has just started its up move. So definitely it's going to, rally in the next coming few weeks. But then again, the momentum is slightly lower over here. So we are expecting, 1700 immediately, and then, higher levels. And 1590 would be a crucial support to watch out.
All right, 1590, a crucial support to watch out for. But what about an Axis Bank? Sachin wants to know, whether Axis Bank is also one stock that could be looked at in the private banking space.
Yes. In fact, if one could compare, then HDFC Bank with Axis Bank, so Axis Bank would be a better pick over here. This stock has, performed great in this year-on-year basis. It's up by more than 20 odd %, and even on the monthly frame, we are seeing that the stock has been, come out of its consolidation of the last 4-5 months. So this indicates that there has been a good base formation, and now the stock is ready for a good up move. So definitely, Axis is also one stock which is on radar for next 1160 levels immediately.
Right, that was about the banking stocks, but let's shift focus to the stock of the day, Fusion Micro. This stock will see a block deal today. Of course, Warburg Pincus arm will be selling a 9.25% stake in this particular stock. Floor price at 535 rupees per share, which is a nearly 5% discount to the current market price. But if you look at the stock price yesterday, I think in the last hour of trade, it did see quite a good spike and ended higher by about 1.5% or thereabouts. Anything you're spotting here in terms of levels?
So we've seen that this stock has, somewhat underperformed in the last 4 months, and although even it's, respecting its previous support zones of around, 550 odd levels, but the momentum is clearly missing. Of course, the news space could trigger a good move over here, but it is still trading near, below its 50 exponential moving average. So the momentum should continue for this stock to, sustain the up move. Or else it may just fizzle out because the stock is moving in a very consolidative range.
All right, that's the view on Fusion Micro. The stock will be in focus today. But let's also shift focus to the brokerage call of the day. We have a Motilal Oswal report on a V-Mart. It has a neutral rating, target price at 1800 rupees per share, and it expects improvement in its core business from the current quarter, which is the Q3. Of FY24. In fact, it believes that there are certain stores of Unlimited that it plans to close in Q4 FY24, and that would bode well because that would help in margin recovery to somewhere around 6 to 7% from FY25. So that's it also expects the company to do well in terms of break even from FY26. If I'm not mistaken, yeah, that's correct. So, looking at this particular stock, it was, in fact, over the last 5 sessions or thereabouts, hasn't really been able to do much. And even if you look at the monthly charts, it has given fairly muted gains. Going forward, do you think, it has the potential to stage a recovery because it is way off its 52-week highs?
Absolutely, Nandita. So we've seen that this stock has underperformed in the year, down by almost 40%, and the month-on-month basis also the stock has been keeping, keep losing its momentum. So somewhere or the other, the stock is not being able to recover and sustain over there. So my take on this would be that technically we should avoid this stock due to lack of momentum and structure. But one could, wait and watch over here. But right now, we could wait for an entry point.
All right, wait for an entry point. I want to talk about IRCTC. It is expanding its footprint beyond railways and looking to get into the catering business in non-railway, the non-railway catering business. Looking at the railway stocks, they have been on a fairly upward trajectory, but do you expect some bit of a cool off to come in? Or do you think, there are, higher levels to be watched out for on the likes of IRCTC, FC, RVNL and all these stocks?
So talking about IRCTC particularly, we've seen that the stock has just come out of its monthly narrow range of the last 6-7 months. It's consolidated for a long time, and now it's getting ready with good volumes being added even, on the weekly basis. We've seen that from the last 2 weeks, there has been a lot of delivery based and long built up over here. So the stock is looking quite positive over here. It is continuously, making a higher lows, which suggests that supports are gradually shifting higher. So one could look out for 810 levels over here with a support near 760 zone.
What about a TVS motor? Naveen has a query on this particular counter. Yesterday, it hit a fresh 52-week high. And it has been doing fairly well. If you look at the last 1 month chart, 20% gains coming in. Do you think time to chase momentum when it comes to this particular stock?
So we've seen that auto space, has has been in rally from the last 2 months from the festivity that had kicked in. But of course, there was some consolidation. But now again, the stock is ready for a good up move. So even in the consolidative phase, we did not see the correction in most of the stocks, which is quite positive, which just suggests that the stock is quite resilient. So talking about TVS Motor, we could expect 2100 levels over here. Even some of the other names in this space is Hero Moto, which is looking quite positive. So these are the stocks one could look out for in auto and auto ancillary space.
All right, that's the view on the auto pack. But let's take up a query on Adani Green. Saurabh Shirsagar has a query on this stock, and he wants to know whether it's the right time to enter into the stock. Adani stocks have seen a phenomenal run, Shivangi. But over the last 5 sessions or thereabouts, we've seen some bit of profit booking. Do you think one should use these dips to buy into Adani group of shares, especially Adani Green?
This entire pack of the group of companies are quite volatile. We've seen a very good up move and these stocks supporting the index. But due to the high beta nature and quite volatility, I'm afraid I won't be able to, talk about this sector.
Right. What about in Infosys? We have a query coming in from Vishnu, wants to know your thoughts on Infosys. But yesterday, the entire IT pack was under severe pressure. Even though the entire market managed to stage a comeback, IT pack continued to sulk. And we had the likes of Infosys, TCS emerging as the top losers. Do you think it's still a buy when it comes to these IT names?
So, if we talk about the entire IT space, it hasn't really performed. It has sustainable. We've seen that there has been an up move, but then again, the kind of rally that we should expect with the index, that hasn't happened in this space. So one could look out for some of the mid-cap names like Persistent Systems or Infosys, for that matter, to chase the momentum. But then again, stocks like TCS or Infosys are still, they've given a good return, and now they are, indicating some sort of, pause in the momentum. So this is the take on the IT space.
All right, that's the view on the IT space. But we have a query coming in on a Deepak Fertilizer from Satvika. Wants to know what should be done with this particular stock. Over the last 1 month, it has gained 7 to 8%. But hasn't really been doing anything in the last 5 to 6 trading sessions, been sideways. Any thoughts here, fertilizer space?
Deepak Fertilizer per se hasn't really performed. Even on the yearly basis, we've seen that the stock has just about been in a quite a smaller range as compared to the previous year. Now, talking about the smaller time frame, we've seen that from the last 3 weeks, it is performing. It is making higher lows, which suggest that the stock is kind of moving upward with buying interest. But then again, the momentum is clearly missing. If one is holding the stock, one could wait for 700 odd levels for immediately, if we talk about the immediate targets. But then again, if one does not have a position, then I would suggest that we could wait and watch.
All right, wait and watch. That's the call on Deepak Fertilizer. Hope that answers your query. The next one is coming in from Srujan Jagirdar. He wants to know your thoughts on a Sonata Software. The stock was down 3 to 4% yesterday, but it is close to its 52-week highs as well. Over the last 6 months or so, it has given a good 40% returns. What should the strategy be here?
Absolutely, this stock has moved, more than 150% in this year, and this outperformance is likely to continue. Even on the monthly basis, we've seen that the stock is continuously, moving in an upward sloping channel. If we talk about the daily frame, of course, there is some softness that we see that we've seen yesterday. But then again, the overall structure is quite positive, and it is respecting to its support zones as well. So next on the cards, would be 750 on the immediate basis, and then 760 levels. And this is a very good buy over here at these levels as well.
All right, a good buy, Sonata. I hope that answers your query. But with that, I'm afraid we are running out of time. So we are done with this query segment. But before I let you go, Shivangi, what are you spotting on the charts in terms of recommendations for our viewers?
So my first pick, which is on my radar, is BEL. We've seen that the stock has come out of its monthly narrow range and a clear-cut breakout over here on all the time frames. Good volumes have been added in the last 3 weeks, which suggests that there is a good upside over here. And even on the daily frame, we've seen that the stock has held on to its support zones of 156 odd levels. So the stock is quite positive, and one could watch out for 168 and then 170 levels over here. 159 would be a crucial support to watch out for. My second pick would be on NMDC. The stock has continuously we've seen that from the last 6 months, it's made higher highs, higher lows, which suggests that any small declines are being utilized in this stock for buying. And on the daily frame, it's come out of its consolidation of the last 10 sessions, which indicates that a good up move and good buying interest can be seen over here with positive divergence on the RSI front. So one could expect 200 levels over here with a stop near 187.
All right, those are the recommendations coming in from Shivangi. With that, Shivangi, always a pleasure chatting with you. Thanks a lot for taking out time, joining in, and of course, addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade. But just a reminder, we have 3 IPOs open for subscription. DOMS opened yesterday. Good demand coming in there. The retail portion subscribed nearly 20 times. And Inox India is one that will be opening up today. And the price band is somewhere around 627 to 660 rupees per share. Whether it's a subscribe or not, well, log on to moneycontrol.com and check out our articles on the analyst views on whether or not to subscribe to this one or not. But with that, completely timed out here. From me and the entire team, thanks a lot for tuning in. Stay tuned because coming up next is Open Time.